Thank you all for joining our first official Cannasure programs and brokerage unit update / webinar. I'm Jim McErlean, Business Development Director here at Cannasure, joined by Kieran O'Rourke, Director of Underwriting. And we'll have a lot of fun talking about Kieran shortly. But I wanted to make sure that you guys were on the same page with us on what we're going to accomplish today. We're going to start with our MGA program updates. You're going to see some new states, some new coverages, some coverage enhancements and capacity increases. As Kieran concludes with some really fun detail on some of the coverages that he's architected for the program, he'll pass it back to me for some brokerage updates that will speak to Cannasure's wholesale brokerage activities for the cannabis and hemp industries. From a housekeeping standpoint, we have muted everybody, and we're going to be watching our Q&A, which is a tab down at the bottom of the Zoom tray. We're not going to watch the Q&A live. We're going to do it as we conclude our presentation. So any questions that are coming in, please get those to us during the presentation, especially as any one topic queues up an idea that you want to get more detail on. So that'll be great, but just know that we're not going to touch on any of the Q&A until we conclude. And then with that, you'll see at the end of our presentation, a chance to get some additional information on behalf of Cannasure. And we just wanted to, again, thank you for your time. We hope that there's participation. It's never fun just being monolithic and monologued in this. We're hoping for a really strong dialogue, looking forward to your input and insights. And with that, I want to introduce Kieran O'Rourke, who has been the architect of the Cannasure MGA program from cradle to grave, as they say, although there's nothing grave about this. It's a wonderful program and hope you guys enjoy.
All right. Thank you, Jim. Appreciate the intro there. And yeah, let's pump the brakes on the grave part. Let's just focus on cradle to wherever we're going. And where we're going today is with an update on some of the capacity support that we've got for the program. And I want to talk about some of the new states that we are going into, as well as we're going to touch on a little bit of business income as a refresher, a little bit of equipment breakdown coverage, and then we'll end up with a reminder of all the optional coverages that the MGA program has that you may have forgotten. Cannasure is extremely fortunate to have such a great agency force, and with many of you joining us here today, I just want to say thank you for being there for us and for believing in our agency and the products and services that we offer. So, as I said, I'm going to start today with a little bit of an update with some of the really good news that we recently received as far as increases in our capacity and in our limits. But as most of you know, if you give an underwriter a microphone, he's liable to use it instead of dropping it. So before I get started, I just want to make another plea from the underwriting office to remember insurance to value. Insurance to value is probably one of the most important things that we do every day. And remember that without with less than proper insurance to value, there are no winners. Nobody wins. Unlike some situations where you might have some silver lining for some party out there somewhere, less than adequate insurance to value produces zero winners. So remember these values. Remember to make sure that your clients are insured properly, not just for the real property, but also for everything else we do, including the business personal property, the income, the tenants improvements, and the industry property as well. That said, let's get into some of the good news here. As far as the MGA capacity goes, we now have up to $40 million available at any one location, $40 million in total insured values at any given location. And that's all the coverages rolled up, everything from the building and the personal property to the industry property as well. $40 million per location. Theoretically, you could have multiple locations all with $40 million. That is still an eligible scenario for the program. So we're very thankful for the support. We're very thankful for the recognition of our efforts to produce a profitable, growing program that buyers and agents can all benefit from. $40 million is an increase from where we were at 32.5. So again, we are grateful for the support from our carrier and reinsurers alike. On the casualty side, we have an extra $1 million available on the excess policy, and that will bring the total premises general liability limit to $6 million as a maximum. That's 5x of 1. We still write the 1 million, 2 million underlying, and now we can do 5 million on top of that. Want to make a note that the excess is available only over our GL, and it cannot go over automobile and somebody else's automobile or somebody else's general liability underlying. Product liability remains unchanged. We have a $5 million capacity that we can deploy. We do that all primary limits. There is no excess involved on the product liability. So just to recap, property at 40 million, general liability plus excess maxes out at 6, and we have our 5 million on product liability as before. At the bottom of the slide, I want you to please note that we are very interested in writing both a primary layer for those buyers that have jumbo risks well in excess of our 40. We can deploy 35 million on a primary layer basis from first dollar up to 35 million. We are interested in talking to you about excess layers. We know that the maximum excess layer we would be able to deploy is going to be a little bit less than 35 million. But we want to consider that on a case-by-case basis. Obviously, attachment point drives many of those decisions as far as where we would land and what we would be able to deploy. One thing we want you to do, though, is to call us on those excess layer opportunities that you have. So this is kind of the big news. We're leading with the big news instead of leaving it to the last slide of the day. Please don't tune out because we've got some other good stuff coming up. Program active states. We are going to be, when it's built out, we're going to be in excess of 30 states plus the District of Columbia. Our active states, you can see at the top of the slide there, the ones in red are the newest additions to our active state list. And we're very excited to get something going in all 4 of those states, Minnesota, Utah, Virginia, and West Virginia. So keep that in mind as you're working on MSOs or accounts that come to you from parts of the country that you are not living in currently. We are excited to get going in all of these active states. Very soon, we will be in 2 of the largest states in the union, California, which has been around the longest, and New York, which just decided to give it a go. So look for our active state status for California and New York coming soon. On the horizon, Indiana, Mississippi, Montana, South Dakota, and Wisconsin are all in the mix as far as future approvals go and states we would like to get into. Okay, obviously this wouldn't be an underwriter presentation if we didn't talk about some forms. So I want to just quickly go over the business income that we offer in the program and just talk about the highlights. This is not continuing education. It's not a CIC course. So just 3 easy slides talking about business income. As you know, we use the monthly limitation option. We wanted to stay away from coinsurance as much as possible, and this was an effort to do that. Just, as a reminder, the fraction does not dictate the amount of months. The fraction dictates the amount of limit available in any given month during the period of restoration. We'll get the period of restoration in just a second. So we still see some, perhaps a little bit of confusion or misunderstanding or what have you, as far as what does that fraction mean, and do I only get 3 months or do I only get 4 months? And that is not the case. You've got the period of restoration, your client does, and the fraction simply says this is how much you can have in any given month. Clearly, if you max out for 3 months and you have 1/3 limitation, okay, you are done. But that means you didn't choose the right limit. That's all. And remember the extra expense. Our form is business income with extra expense. We feel that extra expense is sometimes overlooked. You want to make sure that the limit reflects not only the income over the period of restoration that would be lost, but also the extra expense as well. Again, just as a refresher, the wording in the business income form says this: we will pay for actual loss of business income you sustain during the suspension of your operations during the period of restoration. Nowhere in there does it say you only got 3 months or you only have 4 months. It's the suspension of your client's operations during the period of restoration. And of course, it's got to be from a covered cause of loss, etc. You've got to be buying the coverage. You've got to be naming the premises. But once you have those things done, then you've got a coverage for the period of restoration, which is defined as the period that starts 72 hours after direct physical loss. Of course, everybody knows 72 hours is the time deductible on business income. It's just like $1 deductible on a building. 72 hours is the waiting period, if you will. But essentially, the period of restoration is the earlier of the date when the property at the described premises should be repaired, or the date when the business is resumed at a new location. Very plain and simple, but nowhere in there does it say you've got X number of months, period. It doesn't limit it by time. And then finally, keep in mind that if there's a business income loss on the last day of the policy and the period of restoration stretches on for 12 months, they could be into another renewal after that, and the policy where the income loss happened would still be paying. So the expiration date does not cut short the period of restoration. Okay, I hope to see a few questions perhaps, because I went over that rather quickly. We are on a time schedule today, and I naturally do talk fast, but let's move on to equipment breakdown coverage. We are very pleased to be able to offer equipment breakdown coverage on all of our package policies, all of our property policies. It is it's a very, I'll say, rare commodity, so to speak. We don't have a whole list of carriers that are willing to enter the cannabis space for equipment breakdown coverage. So we're very pleased to have what we have and how we have it. We answer a lot of questions when it comes to equipment breakdown coverage, and we are available to ask a million more. So there are some intricacies and some sublimits when it comes to equipment breakdown coverage. Here is some of them. Actually, this is pretty much all of it. This is how the coverage reads, just kind of summed up. It's a rather simple form, but it does have some areas that may need some explanation. So we invite those questions at any time. Because we value our markets and we try to protect them as much as possible, we do have some questions that are over and above when it comes to some higher limits of business income and property limits and what have you. So I'm asking the agents on the webinar today to be mindful of the fact that we will be asking some questions that we don't have committed to an application just yet when the limits are necessarily high. These questions, many of you have seen them, center around the existence of a pressure vessel boiler. The existence of a boiler for an equipment breakdown carrier suggests that they have to do the jurisdictional inspection on that pressure vessel. So operationally, if nothing else, we need to know if there are any boilers in the building that we're insuring. And then we'd like to know a little bit about the electrical backup system, if any. Not all places have electrical backup, but when they do, we like to document. The extraction equipment, we are trying to get some more detail on that. And you can see on the slide here, there's a few things that we'll be sending out. Jim's going to address our triage process in a little bit. And this will go out, hopefully within 24 hours after we receive your application and send it through our triage process. But it's nothing too onerous, I don't think. It's just some additional application type questions when it comes to the EBC, the equipment breakdown exposure. Again, we want to keep a very strong, vibrant market for equipment breakdown coverage. And, this is part of it, making sure that they're satisfied with the risks that they're on, and they're able to make the, the necessary decisions and inspections as the boilers go. I included this slide because you've heard the term boilerplate. Well, this is where it comes from. These are examples of plates that you see on boilers. Obviously, one of these is a chiller, and the other one is a electrical backup system produced by Kohler. But many times, this is going to be all it takes. These plates on all the equipment we're asking for, somebody with a cell phone and with a camera, boom, it's the information has been collected. So just a tip that many of these pieces of equipment that we are asking about have these types of plates attached to them, and we'll tell virtually the whole story when it comes to our need for additional information. So keep in mind that we're trying to make things as easy as possible, ease of doing business, right? We tend to believe in that. So just a tip for you out there that sometimes this will be all that's needed. Many of these units have QR codes as well, and those can be quite helpful as you're either gathering their information yourself or having your client do it. And finally, before I turn it over to our sales guy extraordinaire, Jim, I wanted to put a slide up to remind everybody that we've got some meaningful optional coverages in our program. The property has 3 nice ones, I think, an expanded property endorsement, a baker's dozen of expanded coverages and limits, sewer discharge. We offer a $25,000 limit, and truth be known, we have paid 2 claims under this little sewer discharge form. And no underwriter's happy to be paying claims, but the fact that we decided to put that into the program and have it being used twice was oddly satisfying. And then, of course, property in transit, not true inland marine, but property in transit that emanates from the property form, owner's goods and owner's vehicles. But we can blow that limit up to $100,000 if necessary. General liability has a number of optional coverages, one of which is damage to premises. We insure a lot of tenants. We insure a lot of operations that are renting space. And if the rental contract demands some type of damage to premises remuneration for the landlord, we can offer that. I've got here that I'm old enough to remember when it was called fire legal. So for some of you, that's what that is. We continue to offer MedPay. In fact, we can increase that to $10,000 if necessary. Employee benefit liability, a often overlooked coverage that could be meaningful to a buyer. We have the ability to offer assault and battery buyback from the exclusion, and we can go up to the limit of the GL, which is $1 million. So that's pretty generous. And then, of course, numerous additional insured forms. The product liability has 3 main adds to it. The product withdrawal expense coverage, again, that's product withdrawal expense. It has nothing to do with the liability. It's simply the expense to go out and withdraw product should there be the cause. This is a $250,000 limit that we offer on a flat charge basis, so it's not even auditable. And of course, the professional sublimit, mainly the dispensaries are buying this. There's a possibility of a claim that what a customer got was professional advice from the person behind the counter, and we want the policy to be able to respond in that situation. And of course, for anybody making a product, many times the vendors of those products say, hey, I want to be added back to your policy as an additional insured because I'm vending your product and I need to be protected. And of course, we're ready, willing, and able to provide that coverage. There's a number of other things, of course. I'm always here to answer questions, as is our team, our underwriting team, as well as our service team, here to answer any of your questions if you don't get it into the Q&A queue and get it answered here today. So with that, I want to thank you for your attention. I think I have minded my time constraint properly and will not get in trouble by the organizers of this webinar. And I want to turn it over now to our sales lead, Jim McErlean. Jim.
Thank you, Kieran. Did we have a chance to see the transition to the brokerage unit slide? Everybody, let's hope. Kieran teed up and Kieran, thanks for providing a great update on our program. It's very exciting to be in this cannabis space as we're watching some of our competitors have challenges with capacity, and a constant conversation from our insurance agents who are joining us today on the webinar that continue to remind us that capacity is a problem in the industry. So it's awesome to see that Kieran, in architecting our program, has been able to put together more coverage, and that's based on the success of our program. So our loss ratios, our coverage structures have all been very positively received from our carrier partner and our reinsurance partners. So Kieran, thanks again. And he teed up triage. I wanted to share before I jumped into the brokerage side, because it's really important to understand that we have two sides of our operations. Triage to us is a daily review of new business submissions that come in the door with our collective team. So we have our account management team, our underwriting team, and our business development team on that call. So we're investing a fair amount of time and resources to review the submissions that come in, with the sincerity of obviously wanting to provide great service, seek out our ability to earn business and to communicate quickly with our agent partners. In that's allowed us to put that focus on our MGA program. So we have the ability to immediately look at the submission to say, we need, questions answered X, Y, and Z. We need to get that equipment breakdown coverage information. We need to get the Cannasure application. Whatever the information is, we're able to get to that quickly, respond back to you, share with you who the assigned account manager is that will be communicating with you throughout the submission process. But that's also allowed us to reconfigure our team and to put a tremendous amount more effort into our brokerage unit. And just looking at how that's gone, while you can imagine the success that we've had because of cannabis in the MGA program, we've been holding fast on our brokerage operations. So even though we've got this unbelievable package program that we have exclusive underwriting authority for, we also utilize the open marketplace for a number of different coverages, of which I'll speak to in a second. But that ability to put more emphasis on our brokerage unit, including kind of the reconfiguration of the team, has allowed us to grow tremendously in 2021 to where we're up 44%. So there's 44% in just the brokerage operations. And that kicks off with cannabis commercial auto. And the obvious story there is that the marketplace is crazy hard. And the fun part is that we have a great insurance partner in Berkeley that has allowed us to bring their program to the marketplace for cannabis, and doing it across apparently all states. We've had, I think, one test in Hawaii that we know we shouldn't do. We haven't tested out Alaska yet, but we know that that's not really where they want to operate. We've operated and bound business in easily 15 to 25 states. I just don't have the numbers in front of me, but it's been across the country and across the board in terms of large, small, and medium-sized operations, to the point where we do an account with just hired and non-owned auto. We do an account with just one owned vehicle, and we have a couple of accounts that have a schedule over 20 vehicles. So it is kind of soup to nuts as it relates to the auto opportunities. And it's been a godsend in terms of our ability to round out our book of business, which obviously we hadn't had the opportunity prior to this program launch on the auto side. The submission, as is typical with cannabis, it does require an application that's very cannabis centric. It does require things like loss runs, Accord apps, MVRs. I mean, there's nothing unique about the process, but what's unique is that we have what seems to be the ability to do distributors, B2B, B2C, so home delivery from dispensaries. So we haven't really found a glitch in appetite yet, outside of the potential armored car type of operations, which isn't the appetite of the program. Another fun thing that we've had to share, and this is something that I learned early on, was that there's no such thing as outdoor cannabis crop coverage. And it continues that it's very difficult to find outdoor cannabis crop, but it's apparently pretty simple to find outdoor hemp crop coverage. So we've joined in with, I believe it's Generali on the carrier side, who has allowed us to write hemp in all states. But what's happened new, and this is the big announcement today, is that they want us to try to bring cannabis outdoor crop opportunities forward. So to our, audience, I was trying to think of another superlative, but to our great audience today, I would love to see you guys give us an opportunity to look at outdoor crop coverage for cannabis. Historically, we've only been able to do medical cannabis, medical marijuana, and hemp. Now they're saying, give us some submissions so we can understand what that looks like if it's different. So big announcement today on that. In general, you're looking at rates that are between 2 and 5% of the peril, per peril of the rate. So $1 million limit of crop would be, the 2% rate per peril. So if you had hail or excess rain or wildfire, those are individual perils that would add up to that individual premium. But what we're seeing for the driver of the placement is the lending community. So folks that have leveraged themselves a little bit and have a loan against their crop, that's what we're seeing drives the purchasing of this historically. So hopefully as we go to the real adult use rec cannabis world, that might change. So let's see what happens with you guys giving us some opportunities to take a couple swings. Moving on, cyber. What we've had a conversation there is very limited distribution, not much capacity, not much appetite, but we found a partner that's doing that in a very robust offering. So they've given us effectively a normal cyber program, and they've just added cannabis to their appetite guide. So they've given us the same first and third party coverages. They've given us the same $1 million limit, the same ability to increase limits upon underwriting review, great claims response or risk management capabilities on behalf of the carrier. So you're looking at a industry-wide monster cyber program that has added cannabis to their appetite and has done so in a limited capacity. So that's been very exciting for us to bring forward to you, and we hope that we can see some opportunities from you. Oops, need to go over there. Hang on. There we go. Sorry about that. Workers' compensation, a class of business or a line of coverage that we have historically kind of batted away. And in our ability to reconfigure our brokerage team, we found that we've got a pretty good carrier partner that has shown us an ability to write business across all states. Our historical conversation with workers' comp was that there were gaps or groupings of states that we either could or couldn't provide coverage. So it didn't help us bring something forward to the marketplace because it wasn't solving the client's coverage issues. So now we've got a carrier that wants to write business in all states and has shown that with a minimum premium of $5,000, that we have the ability to solve or at least be in the conversation of placing workers' comp on a national scale. Interestingly, today we had a conversation with another carrier that has an appetite for hemp growers specifically, and kind of in an affinity or association-based approach. So we're trying to bolster and add to our workers' comp stable of carrier opportunities. So stay tuned as we continue to build out our brokerage team and brokerage unit capacity and capabilities. We haven't had a lot of flood requests up to this point, but we've had carriers that have approached us that wanted to talk about what can we do with flood on behalf of our client base. So we're kind of testing the waters here, no pun intended, that we want to see what you need in terms of flood in the cannabis space. So we have two things that were going on. One is a submission to the open market with 2 or 3 different flood markets that we're working with today. and the other is having an opt-out type of flood sublimit coverage to our cannabis MGA program. Not sure if that's something that the marketplace is seeking, but we're thinking the same things along the lines of cyber as well, which I kind of zipped right past. But we're going to try to put in a sublimit of $100,000 in our MGA program for cyber, and had the same thought of maybe we should do the same thing or sublimit for flood, and let you and your client tell us we do not want that coverage. We think anytime you enhance coverage to a program, that's a positive. Hopefully you guys see it the same way. But looking for your feedback on what flood needs you might have within your client base. Moving forward to crime, definitely a concern with the amount of cash being handled. So we do have a partnership with a very active crime program in the marketplace, and that's gone real well for us. Robust appetite for the crime coverage that they offer, and seek to see some submission flow there to allow us to balance out the book of business and to provide the coverages necessary for your clients. I'm going to wrap it up pretty quick here. Cargo, kind of in the similar vein, cash concerns. We're trying to find options that allow us to provide a more robust cash coverage offering. We see a lot of 25, maybe $50,000 limits to cash. Some programs are giving us 10. So it's tricky. Now, as we continue to spend more time in the commercial auto space, we're seeing more safes or mobile units that provide security when the delivery drivers are bringing forward not only industry property, but the cash. So as long as there's lock boxes in vehicles, we think we can get more robust coverage in the cash space. But industry property in transit has been a need because the commercial auto industry doesn't want to provide that coverage. So even though we might have in Kieran's program, up to $10,000 or $20,000 of property in transit, some of the clients are looking for $100,000 or $400,000 of coverage, and we're trying to get the marketplace to see that need and to meet that need in the open market. So stay tuned there. Management liability, we know, especially folks who are watching any of these cannabis webinars and seminars, that D&O is next to impossible to find outside of Kinsale. The fun part for us is that we have a program that's being developed internally to and through our parent company. So fingers crossed that we have the ability to bring a D&O product forward. But it's going to be a long road to hoe there. We need carriers, we need talent, and hopefully the conversation will move forward well. EPL, we have a couple of different options, not as tricky as D&O in the management liability ranks. We wanted to drive your attention to our website. There's a couple of different sales sheets that we've updated in advance of our presentation today, so you can see some of the coverage enhancements that we put in the MGA program, as well as some of those brokerage unit programs that I just went through pretty quick here. We have sales sheets that can be co-branded if that's something that you guys want to look into, but we have pretty much a sales sheet on nearly every coverage that we speak of, and have the idea to continue that so we can provide support as we share our message to you and you share your message to your teams. So, the website address is right there on the screen, and you have the ability to go get those downloads at your convenience after our webinar concludes. Just about to jump into the Q&A. Last thing I want to say is that we do have, a number of different questions that have come up, and we're going to try to answer as many live as we can until you get sick of us. But if we don't get to your question, you're welcome to use info@cannasure.com to send us any questions that either we didn't get to on your behalf, or that you might have after the webinar is over that you didn't have a chance to ask. But in terms of the housekeeping piece of this, you have the ability to ask questions in a, undisclosed fashion. So anonymous, I guess, is the word I'm looking for. So you can anonymously ask us questions without tipping your hand on who you are. But you can also, just put in your name into the Q&A and we'll answer questions as we go. But that being said, we're live in terms of our Q&A. So let's jump in. Kieran, did you have any one that was right off the top of your head there?
Yeah, hey, Jim, if it's okay with you, I can just kind of head down this list and I can get some answers out there. If there's some elaboration that's needed, perhaps that could be something taken offline via info@cannasure.com or a phone call down the road.
And that might be Kieran freezing. So I'm going to try to pick up one. We had a question on vaults, that we do not have a formal definition of vaults in terms of our ability to share, like we do our greenhouses, but we're going to see if we can't put together some comments, although I think Kieran's back live.
All right. Sorry about that. I had to feed the mouse on the treadmill that's powering all this. I live in the country, so hopefully the connection is, with a whole head of lettuce, it should be good for the rest of the hour. Jim, you were about to wax on nostalgically, obviously, about vaults.
Please go ahead, Kieran.
I'll just pick that up from you. One of the things that we chose not to do is to have a very tight, hard definition of an approved vault room. And one of the reasons is that we saw that there were so many different scenarios, including a tenant in a building where that tenant doesn't have the ability to do whatever he or she wants to do with it. We had some other situations where, we had constraints as far as maybe local building codes or something like that. So in an effort to keep the program open to as many risks as possible, one of the things that we did was to just mandate that any kind of storage room would have to have the ability to slow down the burglar, the criminal, if you will, the wrongdoer that wants to get in sufficiently enough so that it gives time for the authorities to get there and to stop the crime. So, we've heard of, a system that has a 2-hour rating or something like that. There's all sorts of security verbiage that I could probably talk about, but essentially what we want to know is, how is that vault room constructed? The proverbial 6 walls, 4 walls, 2, 1 ceiling and 1 floor. What are the reinforcements in that room, in the door, that would enable that security system to delay the crime sufficiently enough for the other parts of the alarm or other parts of the security system to alert the authorities to get there and to stop the crime. Unfortunately, we haven't gotten that yet. We are putting together some basics that we would like to see, but one of the things we didn't want to do was to just disallow an otherwise great business because there were certain aspects, either zoning or some type of building code or some kind of landlord-tenant agreement that would prevent them from meeting our definition line by line. So probably not the answer that people want to hear, but one of the things that I think it says is that we're underwriters and we're going to look at that situation and make a determination. But the bottom line is the security system in the product storage area has to be able to slow down the crime sufficiently enough for the authorities to get there. So I imagine that's going to engender a whole lot more questions than that you'll have. And I invite any of them at any time. Love talking about this stuff. So I think that probably answers Jesse's question from earlier in the presentation. There was a question about using SIC codes. Our program does not use the SIC codes. We are primarily concerned with writing dispensaries, growers, and manufacturers, either in a state like Washington where they're not vertically integrated, or states where they are. But we don't use the SIC codes. We had a question about rates, cannabis rates substantially higher. Andrew asks, what's the deal with rates? The thing about rates are, first of all, there's a market, that is kind of dictating some rates or whatever, but the cost involved with carriers and reinsurers alike has to be addressed, as does the uncertainty of some of the claims so far. So while cannabis rates do tend to be substantially higher than other industry segments, we do have capacity and we do have products to offer. So as those become more available, perhaps rates will come down accordingly. We had a question about how is the value of marijuana determined? The valuation clause in the program is the lesser of the per plant value for the living plant coverage or the wholesale value at the time of loss. So we always stress that you insure to the wholesale value, whatever that phase may be. The value is determined by, in conjunction with the buyer and you as the agent, and then the valuation clause on the policy then will dictate what to do at the time of claim. But it's a wholesale price that we have in the valuation clause. We had a question about when will the rates be visible on the proposal. We're working on that. We're working on a way to get the audit rates to show up on our proposal that would be valuable in the sales process, I'm sure. Online rating is something that we've got a team working on right now, hoping to get that to you perhaps in the next year or so. We understand ease of doing business never stops, and we want to be there on the forefront technologically as well. Question came in about lowering the time deductible to 72 hours on the business income. Right now in the program side of the house, that is not something that's available. Obviously, it's on our wish list. We've got a lot of folks to convince, but for now, that is not something that we can change. Question came in about equipment breakdown coverage. Does it cover HVAC equipment? Of course it does. Absolutely it does. That is, those are mechanical devices that are apt to break down. So equipment breakdown coverage certainly would address some kind of HVAC breakdown. Question came in about business income. Does it cover ordinary income and our payroll? And it does. That is unchanged from the ISO form that we use. Another question about EBC about higher limits. I assume that is higher limits on some of the sub-limited coverages that we have that I showed on the slide there. Those are not available right now. Of course, the limit of the property is the limit on that we show on the EBC, but the sub-limits are at this time unchangeable. Another question about business income on the period of restoration, where the verbiage says should be repaired by the participant asked, what about delays in building materials and what have you? Really what that, in my opinion, what that clause, what that verbiage is in there for is to protect the company from an insured that is, should I say, dragging their feet and not doing their part to participate in getting the claim handled or whatever. That really doesn't have anything to do with trying to catch somebody in a technicality where building supplies are rare. And well, it should have been done by Wednesday, but it's not going to be done by a week from Wednesday. And so we're going to penalize you. That's not the intent of that at all. One thing that I kind of glossed over, and there was a couple questions about this. The program that we run does have a separate products policy apart from the general liability. We go claims made on the products on a separate policy, and the premises GL is over here on an occurrence basis, no deductible defense outside limits. I apologize for the oversight on that one. Question back on equipment breakdown coverage had to do with deductibles. The equipment breakdown deductible follows the deductible on the policy. And so while my slide had $2,500 in there, if your buyer says, hey, I want to get a $10,000 deductible, that's what the equipment breakdown deductible would be as well. So a little bit of an oversight on my part to not explain that. I apologize, but the deductible for EBC follows that of the policy. There was a question about who is your boiler equipment breakdown market. It is a leading firm, but to my knowledge, Hartford Steam Boiler does not do any of this. So it wouldn't be them. I think that covers probably half the questions. Jim, did you want to take a few?
I've tried to answer a few online as you were zipping through. There's definitely a number of additional equipment breakdown coverages or coverage questions. One that came in was about when we're effectively maxing out on our limits. So that we cannot offer equipment breakdown coverage if there's going to be another carrier up above us. I don't know if you want to add an explanation of that, Kieran?
Jim, you nailed it. I mean, that is just unfortunately the situation that we have with our market. If we are going to do let's say a $35 million primary layer, and the entire TIV might be 57 million, our carrier is unwilling to offer equipment breakdown coverage up to our participation in that tower.
However, what we've done with that, understanding where our capacity starts and stops, we've partnered with the brokerage unit of Cannasure, where we try to bring silo coverages forward to solve the capacity problem. So in this case, we might say, we'll do equipment breakdown, the building, and some business income, and we'll keep that number at, let's say, $30 million for argument's sake. And now there's still another $25 million, or Kieran's example, $27 million of coverage that needs to be placed. We might find another carrier or two or three to take other silos, tenant improvements, BPP, some other additional industry property that's got a specific value, and carve out silos in lieu of talking about towers. So I hope there's a distinction there that you understand that we're taking a whole amount of coverage so it's capped, identified, and there's no claims concerns because we have this and carrier X or carrier Z has that. So that's how we've solved that problem in terms of a limitation of EBC over top of us.
All right. Couple other things going on here. Thomas wanted to know about Delta 8. Delta 8 is quickly becoming a banned substance in a number of states. And speaking from the program side of the house and its carrier partner, we have no interest in ensuring operations that produce Delta 8 products. Another question, does the program accept new ventures? This comes in from Christian. He wanted to know about new ventures. Christian, if we didn't do new ventures, we wouldn't have half the business. So we welcome the new ventures. Obviously, there's underwriting around that, but certainly welcome the new ventures into the program. Kim wanted to know, do you have coverage for mold or bud rot? And in the program, we don't. Jim, I don't know if there's anything on the wholesale side that where mold or bud rot would be a covered cause of loss.
Not in the crop world, so we might have to do some digging on that and maybe get a deeper question going so we can address the marketplace. But no, the answer is no currently, but that doesn't mean we've spent all of our resources to exhaustion on finding a solution.
Okay.
Karen, I saw a couple of auto questions. One was, who do you recommend? Ourselves would we recommend. So bring the submission to Cannasure. You can use that info@cannasure.com for any inquiry, and our team will respond back with the proper applications, redirection on where the submission should go, the depth of the submission requirements, so we can have that conversation. Is there coverage for deliveries in the commercial auto industry through our offering? Yes, we do deliveries between dispensaries to home, and then B2B deliveries. So that could be from a grow operation to a distribution facility, or a distribution facility to a processing center. So yes to all of the above.
All right. Lauren asked about a blanket waiver. Lauren, we don't use the word blanket a whole lot. That's at the status or at the where we are in the insurance segment for cannabis, advanced concepts like blanket are really not part of a whole lot of conversations. We like the word automatic. And so in that case, if it's required by contract, we can work something up where we offer an automatic coverage where required by contract. It's probably a difference without a distinction at this point, but appreciate your question on that. We get that quite often.
Kieran, let me tee one up to you. We had a question on hemp. I think it'd be neat for you to discuss our appetite for hemp.
Yeah, so we really like the hemp processors that are producing isolate in any form. We have a number of these operators where they're taking in massive amounts of biomass and they're producing an isolate product and they sell it in bulk. We love that. And we think that we've got a pretty decent rate point to address that exposure. We think we understand it pretty well. So at the beginning, let's say, of that hemp spectrum, right? And I'm sorry, I didn't mean to use the word spectrum. I was thinking about the isolate. At the beginning of the hemp process, if you will, we really like that in the program. As you get closer to a labeled bottle sitting on the shelf in a retail store, we tend to lose a little bit of interest. But we're certainly interested in the hemp side of the whole thing. Our coverage form is called the Cannabis and Hemp Coverage Form for a reason. So yeah, bring us your hemp guys, if you will, and we'll see what we can do with them.
I'm answering the Texas part of the question online, that we don't really have a timeline for the state of Texas, but the overriding story with any new state for us is one of two things. It's the growth of the state from a medical to rec use perspective, or it's the maturity of the state as relates to how they're issuing licenses. So when we get the confidence that it's a tough process to go get a license, and the regulatory industry or community allows us to have a perspective on risk management where our carrier gets comfortable, that allows us to go into certain states that perhaps we're not into today. So the maturity of a marketplace is one of the driving factors of our entry into a given state.
All right.
Outdoor crop marijuana, wildfire. Yes, 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 yes. So it is one of the covered perils. Might be pricey. You might see that move from 5% of the value to 10% of the value in a brush zone, but it is available. And it's the coverage is considered parametric, which means it's a weather-driven, data-driven coverage. So if we know that in an area there's going to be wildfire and the wildfire hits in accordance to our expectation, that's why there's coverage. So it's just like in a tornado belt, in a rain zone, flood zone. When you surpass the expectation, that's where insurance triggers. That's the unforeseen trigger of coverage. But yes, wildfires, marijuana, outdoor crop, give us a chance.
Jim, there's a question about our business income approach with no co-insurance using the monthly limitation, and how it compares.
Did you write that question yourself?
I did not. I could have. The question is, if we're up against a BI form that uses the co-insurance, what are we looking at essentially? Look, everybody knows that a co-insurance penalty never made anybody's day. And if the claim adjuster comes in and says that your business income recovery is going to be penalized because you were not insured to 80 or 90% of the business income limit that you should have been at the time of loss, there's a penalty for not being insured to value, so to speak, from a business income standpoint. Having a monthly limitation option allows the buyer to buy essentially a chunk of coverage without the threat of a claims adjustment process that would find that they weren't carrying a limit that was 80% of their income need at the time of loss. So one of the designs of the program that we went with early on was to minimize coinsurance as much as possible. Now, clearly on the building, the BPP, the tenants improvements, yes, we have a coinsurance clause. And as I said at the beginning of this show, insurance to value is essential, but the monthly limitation option on business income does not have that insured to value constraint or suffer penalty likewise. So, the negative effect on an insured would be a coinsurance penalty where the monthly limitation does not have that.
I got a couple of cyber questions. Point of clarification, I did mention $1 million limit. That's when we go to the brokerage side and submit to the carrier whose name will not be mentioned for the short term. So that's one of the questions that came up. Who is the cyber carrier? I will share that news as we get the submissions live. But it's $1 million when we submit. The 100,000 value or figure on the slide is the sublimit we're going to implement into the MGA program, and we're targeting July 1st for that. So same carrier is going to give us a chance to both do in-house MGA sublimiting as well as open brokerage, direct placement to the carrier. So stay tuned on the development of that. Workers' compensation, another same question about carrier, and we'll keep that close to the vest as well until we release a couple of quotes on your behalf, and then you'll see. So it's kind of the typical, brokerage answer to who's your market. Same thing on the auto side. So I'm answering that question live as well. Keep that kind of closer to the vessel. I think I mentioned the carrier there. What else you got, Kieran?
I just scanned through again. Here's
a California question about utilizing the current Cannasure application. Yes, we will definitely be enjoying our existing Cannasure application for California submissions. That is live now. We're looking at June 1st as a launch date, but we're trying to take a sneak peek at some submission opportunities. So those who are on the call and have California opportunities, what we would do is triage those, take a look at what they look like. We do not have a rating mechanism that we can release yet, but it gives you a chance for us to ask the questions that we need and to get the submission flowing, especially if it's a June 2nd inception date. So I would say, let's go down that path, utilize the Cannasure application. So thanks for that. Someone else asked a question about the acquisition of Cannasure. And if those who haven't seen that news, 180 Intermediaries has acquired Cannasure a couple months back, and it has been an absolute blessing to work with an organization that has added so much to our operations. Kieran had the pleasure of having conversations early on with the reinsurance marketplace, and it announced the increase in our capacity. And because of our 180 relationship, they helped bring a couple of new reinsurance partners forward that allowed us to expand our capacity that you just saw in our live presentation here. So, thumbs up both ways on our relationship with 180. It's been nothing but good news.
All right, I've got one here that I want to address with the rise of the MSO. The multi-state policy scenario. How do we do that in the program? We are more than happy to write multi-state risks. We do have one small item that we do have to deal with. Our carrier has two separate actual carriers, two paper names, if you will. And some states are filed under one and other states are filed on the other. So if you have an MSO that stretches over a number of states where we are filed in different carrier names, that would necessitate two policies. But we try to get it, try to keep it to just that. Sometimes we get lucky and everything can be written under TOPA insurance, for instance, and then we can continue. We can do just one. But we are very interested in writing the multi-state operations. In fact, We do use the ISO aggregate applies per location endorsement. That affects the GL. Of course, products is not location centric. So it obviously doesn't apply there, but on the general liability, we do have the aggregate applies per location functionality to the product. So 2 policies max, and bring us those MSOs.
Nice. We're at our hour, but we have a ton more questions. So I could zip it over to the timekeeper and ask, should we keep on going and try to ask more questions, or try to do these all offline, as they say? Dana? Kieran, how's your schedule?
Let's follow up if with email, if that's okay with you guys. I think we should keep to an hour.
Okay.
I was promised time and a half for everything over an hour, so I'm good.
Fun stuff. Well, we truly appreciate all the time, all the questions. We will respond back to all of them. We have them all, here in the chat room. I know we've got email addresses. I think our goal was to try to recap some overriding themes and send that out as well. You will see this webinar on our website at some point in time as we get the technology of that nailed down. But really appreciate everyone's time today. We felt the energy coming through the Q&A. Excited that you're excited about our program and what we're doing. Thank you all. Appreciate your support. You guys are great industry and agent partners. Kieran, to you.
Thank you. Thank you, everybody.